So hello everyone, welcome to CA Final Audit Free Fast Track batch. In this batch, we are going to cover entire audit with 100% question answer using our magic book. In this book, we have summarized entire audit with 100% question answer only in 320 pages. Okay. So you can buy this book from our website shivamclasses.com. So we will cover the chapter of bank audit in the 3 lectures. Okay. So this is the lecture number 1. This is the part number 1 for the bank audit. 2 more lectures will come, right? So let's cover the bank audit. Now, bank audit. So what is special in the bank audit? What is special in the bank audit? So it's like audit we normally do. Okay, nothing is special in the bank audit, but there are some other points that is we need to know here. The banks have to comply with the CRR, SLR, cash reserve ratio, statutory liquidity ratio, and the CRAR, capital risk adequacy ratio. So bank have to comply different type of ratios. Okay. Now, bank have to appoint mainly joint auditors. The bank have to appoint mainly joint auditors. So different appointer in case of different type of banks. Okay. In case of banking company, nationalized bank, SBI, and the RRB, regional rural bank. So different type of bank, they are different type of appointer of the auditors. And in case of banks, they are mainly joint auditors. Okay. And the banks have to comply with the different type of ratios. Now, so main area for the audit in the banks. Okay. Main area for the audit in the banks. Mainly bank have lot of cash balances, and they are NPA. It's NPA, non-performing asset. Okay, many time banks are not able to recover their loans, so it will become NPA, non-performing assets. So for that they have to make the provisions. We have to check them as a auditor. Deposit made by people in the banks and contingent liability. Banks have a lot of contingent liabilities like guarantees given by the banks. Okay, so this is the main area for the audit in case of bank audit. Okay, right. So one more important concept, that is the concurrent audit. Auditing the transaction as soon as it happens. It is known as concurrent audit. We will study in this chapter. This is an overview for the bank audit. Now let's start from the magic book. Come back. Okay, magic book से start करते हैं. Okay, the point number A of introduction. Legal framework for the banks in India. Legal framework for the banks in India. So which type of act apply to the banks? Okay. So first of all, Companies Act. Those banks which are a company. So in that case, the Companies Act will apply. This is normal case. Okay. The first point is about the Companies Act that will apply here. Now, if it is a bank, then Banking Regulation Act will apply. Also the RBIA Act will apply. In case of private bank, you can say. In case of government banks, the SBI Act and the RRB, Regional Rural Bank Act will apply. Government banks. Okay. Now, so if there is a bank, banks mainly deal in the money. Also there is online transaction. Also bank give lot of loans. So many times bank are not able to recover those loans. Okay. So bank mainly deals in the giving the loans, money, and online transactions. So if the banks involved in online transaction, they have to comply with the Information Technology Act, IT Act. Also because money involved in their work, so they have to comply. They cover under the Prevention of Money Laundering Act also. Okay. And bank give a lot of loans also. Bank gives a lot of loans also. So many times they are not able to recover those loans. So they become NPA. So bank sell those NPA by making the securities as per the SARFAESI Act. Okay. Now, see there. The first point is basic point, that is the Companies Act. And then for the private bank, there is a Banking Regulation Act and the RBI Act. For the government banks, there is a SBI Act and there is a Regional Rural Bank Act. Okay. So if there is a bank, then they have to provide the many loans. They deal in the money. Okay. The transactions are online. So they have to comply with the IT Act Pamela Act and the Surfacia Act. Okay, so in this way you can learn all these 8 points, right? Now, so what are the characteristics of the banks different from the most of commercial enterprise? Okay, so which characteristics make them different from the other enterprises? Okay, so in summer, we go to bank. Why? To get chilled air of AC. Okay, so if you want chilled air of AC, you have to go to the HDFC bank or the ICICI bank. Never go in the PNB bank or the SBI bank. So what make them different? 2 ice ward. In bank there is 2 ice ward. ठंडा एरिया होता है वहां पे एसी लगा होता है. So 2 ice ward. There is a 2 ice ward. Now, so the characteristics of the banks that make them different from the most commercial enterprises. Okay, so these are the 2 ice ward. By I means the bank make use of the IT, transaction done online. There is a integration and linkage of the settlement system that can be debit card, credit card, checks, etc. Okay, now so 2I then C. By C से होगा custody of large volume and monetary items. Okay, so banks have custody of large number of money and a transaction. By E means engagement in large volume and variety of transactions. So under bank there is a large number of transactions. Normally we do UPI on daily basis nowadays. Okay, so there are variety of transactions. That's like debit card transaction, credit card transaction, RTGS and RTGS हो गया, then online banking हो गया. So there are many type of transaction. There is variety of transaction and in large volume. So 2 I's ward. By W means wide network of branches. Wide network of branches. Mainly in every city they have a branches. Now A. By A means assumption of significant commitments without transfer of fund. Assumption of significant commitment without transfer of fund, just like bank guarantee. Okay, see there. They often assume the significant commitments without any transfer of fund. These items normally called off balance sheet item. Okay, इसको हम off balance sheet item बोलते हैं. That may not involve accounting entries, and consequently the failure to record such items may be difficult to detect. So these are off balance sheet items like guarantee given by the bank, loan commitment, letter of credit, or underwriting facilities. Okay, now it's 2 I's word. W is done, A and then by R. By R means regulatory requirement. They have to comply with the regulatory requirement. By D means direct initiative and completion of the transaction, just like ATM, etc. Okay, 2 I's word. 2 I's word. I means IT का use होता है. By I means integration and linkage, use of the debit card, credit card, checks, etc. Then by C means custody of large volume of monetary items, money, gold, etc. And there is engagement is large volume transaction and variety of transactions like debit card, credit card, UPI, online banking, RTGS, etc. Okay, ward. By W means they have wide network and they have many branches in different cities. By A means assumption of significant commitments like guarantees, letter of credit, etc. By R means regulatory compliance, different type of laws they have to comply. And by D means direct initiative and completion, just like ATM. Okay, learn this in this way. Now there's some special consideration in case of banks. There are some special audit considerations in case of banks. See here. So bank, because of certain characteristics, distinguished from other commercial enterprises. Okay. Hence, the need Special audit consideration. Specify the various which may be necessitate the special audit consideration. So what special point you need to consider in case of bank audit? Okay, special audit consideration in case of bank audit. These are the assessor use technology. You can assume he is assessor, he is assessor. He is working in the bank and he is using the technology. You have to verify assessor use the technology. In case of bank, assessor use the technology. Assessor use the technology. You have to verify this. This is the special audit consideration in case of bank audit, right? Okay. Now, so by S means various statutory and the regulatory requirement. They have to comply with various type of laws. Okay, this type of laws. Now, by C means continuing the development of the new product. Nowadays, on daily basis, bank launching on different type of product and services. Like there is a metal card recently launched by them, metal cards, etc. On daily basis, they introduce different type of loans, home loan, this scheme, that scheme. Okay, so on daily basis, banks are developing different type of new product and services. Now, by S means scale of banking operations. Okay, now banks are operating in every city. They have significant exposure arise in short period of time. Okay, now by I means extensive dependence on the IT. This is simple. By R means particular nature of risk associated with the transactions. Okay, use technology. Evaluation of the technology providing services to the net banking, mobile, expose bank to the use, operation and risk. Why this? Many times we have seen in the news that banks wrongly credit crore rupees in one person account. Okay, so if this happen and that person use that money, so it will be loss for the that bank. Okay, now so assessor use technology. Assessor use technology. This is the special consideration in case of the bank audit, right? Okay. Now, so this portion just read, not important. Just read, not important. For example, okay, right. Now, so they have to make their financial statements, just like what are their forms and their contents. So they have to follow the schedule 3 to the Banking Regulation Act 1949. Form A for the balance sheet and the Form B for the profit and loss account. Okay, they have to comply with the disclosure requirement that is given in the accounting standard and the specified under section 133 of the Companies Act. Okay, and the Ind AS are not applied to the bank. They are deferred by the RBI for the scheduled commercial banks. Now, in the private banks, processes of the accounting are centralized. There is no mandatory branch audit. Just read it and learn it. Okay, maybe MCQ may be framed by the ICI, but no question will be asked on this. Now, so most banks appoint the 4 or more CA firm to act jointly as a SCA, statutory central auditor. Okay, so in case of banks, they are mostly joint auditors, right? So their appointment letter contain these words like period, joint audit, previous auditor, procedural requirement of accepting the assignment, division of work between the auditors and the scope. Okay, and special report also given by them. This is covered in last of this chapter. Other reports given by them, last of this chapter. Right? Okay. Now, see here, who is the appointing authority in case of banks? So there are different type of banks. So as per that, there are different type of appointing authority. So in case of banking company, And in case of nationalized bank, in case of banking company, in AGM, shareholder appoint the auditor. In case of nationalized bank, the BOD appoint the auditor, plus their RBI approval is required in that case. In case of banking company, by the shareholders. In case of nationalized bank, by the by the BOD, plus the RBI approval is required. In case of SBI, this is the government bank, so by CAG with CG consultation. In case of regional rural banks, by their bank themselves, plus CG approval is required. Okay, again, no question can be asked. Maybe MCQ frame on this topic. Now, conducting an audit. Just read. Also, just read this portion. This portion is not important. We have covered everything in our magic book. Okay. That's less important topic. We have marked. Just read. Okay. Just read this and left this. Not so important for. So, initial consideration. There is acceptance and continuous as per SA 210. Declaration of the indebtedness, whether the auditor is indebted to the bank. If he is indebted to the bank, then he will give a clear report. Okay, so they will declare this before starting the audit. The term of audit engagement, the communication with the previous auditor, why he left this audit. Okay, establishment of a team for conducting the audit, then do understanding, take understanding of the bank and its environment, including the internal control, bank's accounting process, and the risk management process. Okay, so there is a separate question on this topic. This is important. Let's read this, then we will cover this, the risk management process. Now, risk assessment, identify and assess the ROMM, fraud risk, specific risk, and risk of outsourcing of the activity that is done by the banks here. Then start the audit. Execution, the engagement team do the discussions about the fraud where it can be happen. Response to assess risk as per SA 330. Then establish the overall strategy, audit strategy as per SA 300, and determine the audit materiality and going concern as per SA 5, as per SA 320 and 570. Reporting, independent auditor report, and the LFAR, long form audit report. This is covered in the last of this chapter. We will cover that also. Now, so this is not important, just read this and left this. What is important? This topic is important. So bank should have a risk management process. Okay, how to memorize this? Step by step. Okay, understanding the risk management process. So bank should have a risk management process. Number one, they should be oversight by the TCWG. They should approve the risk management policy consistent with the bank's objective, strategies, and regulatory requirement. They should make the risk management policies in the step one. Okay, first the policy is made. In the second step, there is identification, measurement, and monitoring of the risk that can be happen. First make the policies, then identify, measure, and monitor the risk. Now they find any risk. First make the policies. Now identify the risk, measure the risk. So now we have identified the risk in second step. Okay, first make the policy, then in second step identify the risk. In third step, to control that risk, apply the control activities. For that, there should be segregation of duties. Okay, complete work never assigned to single person, divide between many persons. Okay, work of one person cross verified by the other person. Verification and approval of transactions and physical security also. Okay, apply the control activities here. Now, okay, first make the policies, identify the risk, apply the control activities. Now, when the control is applied, monitor this, monitoring activities. Risk management models, methods, assumptions used to measure and manage the risk conducted by the independent risk management unit. Okay, in the last step, they should be reliable, information system that will provide them a complete information, okay, that provide adequate compliance, financial and the operation information to the bank authority here. In this way you can learn step by step this, right? Now, special consideration in case of IT environment. Okay, so while doing the audit in the IT environment, we need to consider this. Okay, 2DAM control plans. 2DAM control plans. Two-DAM control plans, as we said, damn beautiful. The same like that. Or 2DAM control plans means best control plans. They should be best control plans or 2DAM control plans. These are the special consideration in case of the IT environment that we have to keep as the auditor. Okay, or 2DAM control plans. By O means overall IT policy, structure and environment in the bank. Okay, the policy adopted by the bank for the IT system, etc. Then 2DAM means DAM, all of three times. Data processing and interface under various system. Okay, so how the information added in the system, how the information processed, data integrity, security. By A means accounting manual, accounting entries, their process, involvement of IT. By M means again MIS report, their timing period, major exception report and the generation. Then control on the recording of various e-banking and the internet banking product and channels. And by plan means business continuity plans and disaster control plans. So we have to keep consideration of these points for the IT environment. So overall review of the IT environment and computerized accounting system has to be taken at the HO level. Okay, this can be asked in MCQ at the head office level. The branch auditor does not have access. The branch auditor does not have access to the IT policy. That is implied by the bank here. Okay, so it will be taken care of at the head office level, HO level. Now, hence, based on the guidance and the information received from the SCA, the branch auditor assured that the data review analysis through the CBS is carried out, plus test of control, testing, checking of transaction is carried out at the branch level and result shared with the SCA. Okay, simple means is that the branch auditor does not have access to the IT policy. They receive the guidance and information from the SCA, statutory center auditor. Then they conduct their work as per that. Okay. Now, key control aspect that the auditor need to address while undertaking the audit in computerized bank. Okay. So aspect that auditor need to address while undertaking the audit in the computerized bank. These are the, we have to ensure the AI, verify the sub-access latest, ensure AI and verify the sub-access latest. Okay, so ensure AI. So authorize accurate and complete data available for processing. Okay, if we enter a wrong data, then result will be wrong. If we enter a wrong rate for the interest, then the whole calculation goes wrong. So ensure AI, verify the sub-access latest, because in case of banks nowadays all the work done by the computerized system. Okay, now by I means in case of power failure, if there is a power failure, then system restart without distorting the data, means there is no data loss in case of power failure. Ensure that, otherwise all the information will lost. Verify the sub-access latest. Okay, by system prevents the unauthorized amendments. Those who have the login password, only those can use the systems. And there should be segregation of duties ensured while granting the system access to users. Okay, every person have different responsibilities. Now, balance in the general ledger tally with the subsidiary books, means temporary books. Temporary books. Those balance in general ledger which should be tallied with the subsidiary books. Backup media stored in fireproof cabinet with lock and key off-site backup for the emergency. Okay, otherwise what will happen if all the data about the customer, the amount deposited by them get fire? So now people claim any amount. I will ask, I have deposited the 5 lakh, 10 lakh, 10 crore. Okay, so for this purpose, keep it in the fireproof area, fireproof cabinet. Latest antivirus should be installed and the access to computerized system only to the authorized person. Right? So ensure AI and verify the sub-access status. In this way, you can learn all these points. You can learn 5 to 6 points out of the 8. Okay. Now, risk-based internal audit. So, chief audit executive of the bank is responsible for doing the RBIA, risk-based internal audit. So, it is conducted based on the risk assessment of the business and control of branches. It includes the identification of inherent business risk, just like business risk, inherent risk, then the control risk. Assessment of the effectiveness of the control systems for monitoring the inherent risk of the business activity of branches. Just like we do in the audit, first we calculate the inherent risk, that is the business risk, then the control risk, means control applied by the management. Control applied by the management will go fail, is the control risk. And assessing the level, direction of the various risk area, overall business risk and the control risk, and draw risk matrix in the last one. Okay, it is a complete theory, you have to cram this only, but also it is not important, this point is not important. Now this point is very, very important for example, and question may be framed on this. So we have to check the internal control in certain selected areas. Okay, for the clearing, for the loan advances, for the credit card operations. Okay, now see here, for the clearing purpose, see here, in the bank there is a process of check truncation system, CTS. So what we will check in case of clearing? Check truncation system, CTS. So electronic image of check transmitted to the paying branch to the clearing house, plus information like ICR band, date of presentation and presenting bank, etc. Okay, as you get stipend in your article chip, so assume this is your SIR bank where you are doing your article chip, your SIRs, your principal bank. And this is your bank where you have account. In this bank your SIR have account, your principal have account, and this bank you have account. Your SIR issue a check to you, right, for 10,000 rupees for your stipend. Okay, so first of all you deposit this check in your bank. Okay, we will call it outward clearing. Okay, now your bank send a image of this check, to your SIR's bank. Okay, now this bank check the image, check the sign, also verify the sign of your SIR, your principal, then issue the money to your bank, then your bank will pay to you. Okay, so in this way this whole process works. For the SIR bank, for your principal bank, this is a inward clearing. For your bank it's a outward clearing, but for your SIR bank it's a inward clearing. Now, so we have to check the here in case of bank audit, the internal control of certain area. Now we are talking about the clearings. So check truncation system. In this system, a electronic image sent by your bank to your sir bank, okay, through a clearing house. Also there is a clearing house, a mediator. This is a mediator. Also the MIRC band, date of presentation and this data, okay, for clearing that check. We have to check the control over this. Right? Okay. Now, the branch is required. Either call the customer or email the customer for a check of amount 5 lakh rupees. Okay. Now your sir branch, where your sir have bank, your principal have bank, this branch should call or email to your principal if amount is more than 5 lakh rupees. Right? Above in respect of inward clearing. Okay, 5 lakh and above in respect of inward clearing. For this bank, this is the inward clearing. Okay, for your bank, it is the outward clearing. So the bank having the inward clearing, verify this, call that customer, email that customer if the amount is more than 5 lakh rupees before giving that money, before clearing that check. Now, trust auditor to verify the compliance on test check basis. Also, we have to check the compliance on test check basis. Not all 1, 2, etc. possible. Okay. Now, signature of the drawer of check verified by the staff or note. Okay. This check image signature should be checked by staff of inward clearing bank. As a auditor, we have to check the control over that, whether this signature are checked by the staff or not. Otherwise, there will be liability for the paying bank. Right? Now, the unpaid check received in outward clearing, either send or inform to the customer. Okay, we are talking about the outward clearing. So this is the outward clearing for the your bank. Okay, so if this image note match, the sign note match, in that case, this became a unpaid check. Okay, received in outward clearing. This will be sent and informed to the customer. Okay, if this image does not match, then the outward clearing, in case of outward clearing, this bank call you, message you that your check is not clear, so that your check is not clear. They will inform you about this. This is the whole process. So in this way, you have to learn this. Okay, use that image and learn all these 4 points in this way. Clear? Now, for the loan advances, the borrower, 2 securities are sufficient. If the bank gives the loan advances to a borrower, so which control we have to check? The borrower, 2 securities are sufficient and report the necessary drawing power. Borrower, 2 securities are sufficient and report the necessary drawing power. Borrower. So we have to check the credit worthiness of the borrower before giving the loan. Okay, as a auditor, we have to check the control over these transactions. Okay, so whether the bank has checked the credit worthiness of borrower before giving the loan. So what do you mean by the credit worthiness? So credit worthiness is the lender's appraisal. Before giving the loan, the bank make the appraisal of how likely to you are repay your debt. Okay, the lender assess your credit worthiness by taking into account the consideration your income, your past history of borrowing and repaying of the debt. This is the credit worthiness that is assessed by the bank here. Okay, now 2 securities. Securities received and returned by responsible person only. Okay, and in case of joint custody, and security registered in name of bank only, always can be asked in MCQ. So borrower, 2 securities are sufficient. They should be sufficient margin also, cover against the decline in security value and comply with the RBI directives. Okay, if the bank giving a loan of the 10 lakh rupees, then the security should be 50 lakh rupees or 12 lakh rupees, means more than loan value, more than the loan value. Otherwise, if there is decline, there is a loss for the bank. Okay, now, and report the necessary DP. Report any irregularity in the account should report to the head office. And necessary DP, necessary document executed before giving advance. And DP. So account kept within the drawing power. The account should be kept within the drawing power and sanctioned the limit as per the norms. So what do you mean by the drawing power? We are saying that the account should be in the DP, drawing power. What do you mean by drawing power? The drawing power is the limit upon which every borrower can withdraw the money within the cash credit. Okay, if you've taken a cash credit facility, overdraft facility, so this is the maximum amount that you can withdraw from the CC limit. Okay, the drawing power can be calculated based on the specific margins and other terms and conditions contained in the sanction letter. Okay, DP can be on your stock and your book debts, maybe 25% of the stock, 40% of the book debts of net debtors, which may vary from bank to bank. Okay, so what is the difference between the drawing power and the sanction limit? Okay, the drawing power is the limit up to which the account holder can withdraw against the security of current assets, like 25% of the stock, 40% of the debtors. Okay, this is the maximum limit up to which you can withdraw. And the sanction limit is the total exposure that a bank can take on a particular client, which include the overdraft and the CC. Okay, your CC limit is 1 CR, but your drawing power limit is less than CC limit, maybe the 25% of the stock or 40% of the book debt. Okay, so the maximum drawing power cannot be more than sanction limit. It should be less than the sanction limit or equal to the sanction limit. Okay, always less than sanction limit it should be. Now, for the credit card operations, LCO bank detail in providing the credit card facilities. Bank deals in providing the credit card facilities. The bank is aware of the fact that there should be strict control over the storage and issuance of the credit card. So how you evaluate the internal control system for the credit card operations? Okay, and this question asked in many times in the MTP, RTP exam also. Okay, first of all, bank gives you loan, gives you a credit card. Then by using this card you purchase many item. Now you are not able to pay that back. Okay, then bank apply the interest on them, then again interest. Now you are not able to repay that. Now you are not able to repay that interest and that credit part. Now you become joker for a circus. Now you will become joker of a circus. FR circus is the memory technique to learn all this point. FR circus. Okay, by F means the system to monitor and follow up the customer payment. Okay, there should be a system in the bank to monitor the customer, how much amount used by which customer, and they should be follow up. If limit is crossed for a customer, bank should call them that your limit is crossed. Okay, follow up with the customer's payment. Okay, ask them to make payment. You have crossed the limit here. Okay, so by means F means follow up the customer payment and monitor them also. By R means system of prompt reporting by the merchant of all settlements accepted. If a merchant using a credit card machine, swipe machine, then there should be prompt reporting by the merchant whenever they accept any payment by using the debit card or credit card, etc. We are talking about the credit card here. Okay, now circus by C means there should be strict control over storage and issuance of the card. By E means effective screening of the application with credit assessment. Okay, should not be issued to everyone. First we will check whether the person will be able to pay back or not. Okay, after verifying that credit card should be issued. By R means reimbursement to the merchant only after the verification of the valid acceptance. Now, by C means reimbursement of gross commissions immediately charged to the customer account. Okay, if any payment made by the bank to that merchant, then immediately the gross of commission means including the commission, that amount used by the customer plus the bank's commission, immediately charged to the customer account. Now, by U means system for periodic review of the credit card holders and how much limit they have used. They should be periodical review for the debt. By S mean the system to ensure that the settlements are regularly sent and promptly to customer. Statements are sent regularly to customers. Okay, how much money are used by them and how much payment made by them, for that statement are regularly sent to the customer also. Okay, so FR circus, this should be controlled for the credit card operation by the banks. Okay, this is clear. Now there is a SRR and the CRR requirement. By CRR means cash reserve ratio, by SRR means statutory liquidity ratio. Okay, let's understand the concept of CRR and the SRR. So CRR, cash reserve ratio. So CRR is the percentage of bank total deposit that it needs to maintain as a liquid cash. Okay, so whenever some person deposits some amount, so some percentage of this, it's like assume the CRR is 6%. Okay, so 6% of the amount deposited by the customer, this is the percentage of bank deposit that it need to be maintaining liquid cash. This is the RBI requirement, and the cash reserve is with the bank. So this 6% they have to maintain with the RBI. Okay, this is a note current rate that you can check on the Google. Okay, we're just taking the example for that. This is some percentage that we have to maintain in the cash of deposit made by the customer with the RBI. Also, the bank does not get any interest on this deposit with the RBI. Neither they can use it for the any other purpose or investment. Right? Now, so bank have mainly two type of deposit. Okay, the money in the saving account or the current account, this is called demand liability, and the money in the time bound fixed deposit, this is called time liability. So this become DTL, deposit and the time liability. Deposit for the short term, that is the current account and the saving account, and time liability means just like FD, etc. This money is used by the bank to provide the loans to the various peoples. Okay, so let's take example. A person deposited the 1000 rupees with the bank. So they have to give CRR, cash reserve ratio, that may be 6% to the RBI. Maintain in cash with the RBI. They also don't get any interest on that part. Okay, now of 1000 rupees, the 60 rupees goes to the RBI. This is clear. Now there is a SLR also. What it means? Statutory liquidity ratio. The bank also have to require to maintain the gold, cash and the government approved securities and the other liquid asset. This may be 20%, you can say 20%. So of 1000, 20% they have to maintain in the SLR in case of in form of gold, cash, government securities. Gold, cash or government securities with themselves. Okay, then remaining of 740 they can give as a loan. Right? Why to maintain this amount? If any person come to withdraw, so that bank have enough balance and amount in their head and amount in their hand to pay it back. understood the concept of CRR and SLR to pay it back. Now, so cash reserve ratio, this is the minimum fraction of deposit in the cash or deposit with the RBI. For that, we have to check the circular of the RBI for its compliance. And statutory liquidity ratio, this is the required to maintain the gold, cash, government securities as a liquid asset. And report should be submitted to the management and the RBI. For its compliance should be on the 12 odd days. Okay, its compliance should be checked on the 12 odd days, not on the Friday. Okay, many times this is asked in the MCQ. And there should be correctness of the compilation of the DTL and maintenance of the liquid asset. Okay, they have to check the correctness of the DTL, means deposit and the time liability, because we have to take the percentage of the DTL na yahan pe. This 6% and 20% should be taken of the DTL. So DTL collection, DTL calculation should be correct. Calculation should be correct. Otherwise, the ratio will be wrong here. Okay. Now, there are some audit procedures that we have to check the compliance with CRR and the SLR. So what special point to be borne in mind in audit of the compliance with statutory liquidity ratio? The audit procedures. Understand the circular and the direction of the RBI for the DTL, demand and time liability. You can write here demand and time liability. Demand and time liability. Request the branch auditor weekly trial balance on the Friday. Okay, why we not check the Friday? Because on Friday a trial balance is made there, and consolidation at the head office. Also on the date selected by the auditor, specific request examine the cash balance on the selected date. Okay, do this process. And test basis examine the consolidation detail also. Okay, now in the DTL, which we include and which we exclude. So exclusion from the liabilities, and we will add this and we will not add this in the DTL. In DTL. So we should not add the any paid up share capital, reserve capital, any balance in the profit and loss account, loan taken from the RBI, refinance taken from the Exim Bank, NHB, SIDB, Nabarad, etc. Okay, any part amount of the recovery from the borrowers, from the bad debts. Okay, also not counted here. Amount saved in the Indian rupees from the import bills and sundry deposit pendings. Unadjusted deposit balances in link branches for the dividend, interest, warranties also not counted here. Any margin in a sundry deposit for the fund did facilities. Okay, many times when a bank give loan for the 20 lakh rupees, they keep the 50k as a margin. Okay, so this 50k will not be counted here. Inclusion in the liabilities, but we will add there. Any net credit balance in the branch adjustment account, including the foreign branch account. So what do you mean by the branch adjustment account here? So in the branch adjustment account is prepared to record the gross profit and loss of the branch while preparing the final account. So any credit balance in the branch adjustment account, any credit balance in the branch adjustment account should be counted here. Okay, borrowing from the abroad by Indian banks, consider it as a liability to other without netting off. Okay, it will be counted here. And interest accrued but not counted for in the books should be counted here. Okay, so in this way you have to cover this. For remaining part we will cover in lecture number 2 and lecture number 3. Okay, in this lecture we will cover till this only. So goodbye, all the very best, goodbye.